Hi, I'm David Stein of Money for the Rest of Us, and in this video I describe why U.S. home mortgages, the rates are lower and the terms more lenient than other countries because the U.S. government backs 90% of U.S. issued mortgages. Recently, in episode 238 of the Money for the Rest of Us podcast, I compared housing finance in the U.S. versus Denmark. Denmark typically is considered a socialist nation with the government very much involved in many aspects of their citizens' lives. Yet when it comes to housing finance, the Danish government really isn't that involved. Whereas in the US, the government is very much involved in the issuance of new home mortgages. There are three entities: Ginnie, which is actually owned by the federal government, and Fannie Mae and Freddie Mac, which are government-sponsored entities which are in conservatorship. The government took control of those entities in 2008. Collectively, those three entities package up mortgages, some that they buy, most of they buy in the secondary market. They package them up and they issue them as what are known as mortgage-backed securities. These are bonds that pay interest and principal, and they're a debt instrument that you can invest in. But the government guarantees, either directly through Ginnie Mae or implicitly through Fannie Mae and Freddie Mac, guarantees defaults against those mortgages. So if you own one of these mortgage-backed securities, if the mortgage defaults, you're covered by those entities. Now, in Denmark, it's the same. If you buy a mortgage-backed security in Denmark, you also don't take on that credit risk of the borrowers defaulting. But in there, the banks maintain the credit risk. They are responsible for those mortgages if they default. In the US, the banks only have to guarantee about 10%. So they're on the hook for 10% of what happens after a mortgage defaults. What that means is the terms in the US are much more lenient. If you default on your mortgage, you can turn in the keys, walk away from your house, and you're not personally liable for the shortfall if the house is sold and doesn't cover the entire balance on the mortgage. In Denmark, if someone defaults on their mortgage there, if there's a shortfall, if the house is worth less than the mortgage after it's sold, you're personally liable. The bank can come after your other assets. So that's a huge advantage in the US. And as a result, as you can imagine, the default rates on Danish mortgages are much less. There's a huge incentive not to default. On average, defaults in Denmark on mortgages is about 0.5% or less. In the US, the default rate right now is around 3% and got as high as 11% in 2009. The highest default rate I could see in Denmark was in 1990 was 1.5%. So that's a huge advantage. More lenient terms for U.S. mortgages because of government involvement. Now, what about mortgage rates? Are mortgage rates higher in the U.S. or higher in Denmark? They're actually lower in Denmark. The average mortgage rate for a 10-plus year mortgage, so 10 to 30 years, is around 2.7% in Denmark. The comparable figure in the U.S. is 4.5%. Why are rates lower in Denmark? Well, they're lower because overall interest rates are lower. The yield on the 10-year Danish government bond is only 0.1% versus 2.7% for the 10-year government bond yield in the US. So because overall interest rates are lower there, mortgage rates are lower. But after adjusting for that, the mortgage rates in Denmark are a little higher than they would be otherwise because the Danish government isn't backing the mortgage. In the US, because of that guarantee, mortgage rates are lower than they would be otherwise. So if you're considering buying a house in the US, be thankful the government is involved in the mortgage market like they are. Hey, if you have any questions on this video, you can leave those in the comments. And please subscribe to my channel. That way you'll be notified if you click the bell anytime I upload a new video. Thanks.